Hi, my name is Kamil A OW, and I'm a senior at Frisco High School this year, and I'm studying investment banking as my topic for ISM. So my quote is, "The only place where your dream becomes impossible is your own thinking." This is a quote I use to help motivate myself, to help me know everything I want to do is possible, and that if I put my mind to it, if I put in the hard work and the effort, anything is achievable. So a little bit about myself. I was born May 29th in Paterson, New Jersey. After living there for a couple of years, my family moved to Saudi Arabia, where we lived for about 10 years. And I attended the American International School over there, and I got to meet with people from all across the world. I had students from Argentina, Spain, Russia, Germany. So it was a great experience living over there. I've always participated in sports. My two favorite sports have been soccer and tennis. I played here at school the past couple of years. I haven't been playing this year though. And then my family, I have two younger sisters and a younger brother. So for ISM, I ultimately just wanted to increase my knowledge in the field of finance. I've always known I wanted to study finance, but just this year has really helped me focus in on investment banking as a career choice for myself. So the reason I was always interested in finance is because my parents, I always lived with my mom and dad, but my dad was always traveling, so a lot of the time I spent time with my uncle, and he was the first person in our family to enter the field of finance, and just spending time with him and being motivated by him and just spending time with him in the office just made me feel like that was what I wanted to do. And honestly, that's the only thing I've actually looked into. I've really enjoyed it so far, so I think it's working out pretty well. And then a little clarification on what investment banking is. Investment banking can generally be defined as a specific division of banking related to the creation of capital for other companies. So in other words, investment banks are pretty much the real estates of the business world. They help sell and buy companies. For other companies, they also provide advice. They also help companies enter the stock market if they want to become a public company and stuff like that. So from a career outlook assessment, I found that investment banking is a really difficult job to obtain. There's only around 22,000 jobs available on a yearly basis globally. So just getting a job is really difficult. And the reason that is because it does have a lot of prestige to it. There are a lot of benefits and perks, and it does have a very lucrative pay starting out. So some of the research assessments I did this year started off with how to get an investment banking job. A lot of the things when people want to enter the field of investment banking, there's multiple sectors people study. So the best way to get in, having spoken with a lot of my mentors, colleagues, was to find an internship. Internships you can find probably your sophomore or junior year of college, and getting one of those is really helpful to landing a job once you get out of college. Next was networking. Networking is big in all aspects in any career path, but especially in finance, because meeting with the right person or building a connection with the right people can really help you in the long run. And lastly is the resume. Like I said, there's a lot of sectors within investment banking. People can focus on the energy sector, consumer sector, retail, stuff like that. So if you're coming from one of those sectors and you want to join an investment bank, bankifying your resume is the term they use in the investment banking world, where it makes your resume more suitable for an investment bank. And then within investment banking, there's two types. There's the bulge bracket firms, which deal with billions and billions of dollars on a daily basis, and there's the boutique banks, which still deal with a lot of money, but they are on a smaller scale and are not as global. My third research assessment was based on mergers and acquisitions, and that's what really intrigued me about investment banking, was selling and buying companies. What I learned was that following the 2008 economics collapse, there's been a recent boom, and a lot more companies and investors are expecting their companies to further expand and diversify. So buying companies maybe not within the same sector as like a company in technology, maybe buying a pharmaceutical company, just to diversify themselves and find other ways to make money. Another assessment I did was on company valuations. Valuations are the basis of all of investment banking. There's multiple valuation methods. The most common one, and the one I specifically focused on, was discounted cash flow. For my article that I researched, I looked up one of the best professors that teaches it, Damodaran. He's a professor at NYU, and he's considered the guru of valuations. So I just went through one of his PowerPoints and lesson plans, and I found it to be really informational, and I learned a lot from it. And lastly, for my research assessments, I looked up the Wall Street atmosphere currently, and a lot of it is surprisingly shifting away from investment banking to more private equity, which is more of the buy side, where they're the ones that are buying companies, whereas investment banks are the ones that are helping selling the companies. So I found that interesting because investment banks have had a huge reputation on Wall Street just the past 30 years. So I found that sort of shift to be really surprising, but also intriguing. Now to my interviews. Living here in Dallas, there aren't a lot of investment banks just because it's not one of the larger cities and not one of the global cities. So I reached out to other aspects of finance. My first interview was with Miss Etheridge. She's an advisor at Wells Fargo. She's a financial advisor, and she had an interesting story I found to be very inspiring because she started off graduating from Texas A&M. She went off to work at a small bank in South Texas, and she had worked there for about 3 years, and she said she felt she earned a promotion, but she was never granted one. So she went ahead and asked why that's the case, and they straight up told her it's because you're a woman. She felt so disrespected and denigrated that day. She felt that she wanted to take control of her own career, so she went out and became a financial advisor, which is a very free career where you can go out and you choose your own hours, you choose your own clients, stuff like that. So I just found her perseverance and her her attitude, just going ahead and taking advantage, seizing her opportunity, I found to be very inspiring. My next interview was with Mr. Goff. He's a senior vice president at a private wealth management company here in Merrill Lynch. He himself started off in the pharmaceutical business and working for about 30 years in that, and he just one day decided he was done with that and he wanted to move into finance. So he went ahead with no formal education in finance, and he went ahead and he's built a very successful company. He deals with high net worth individuals, which are individuals who have over $10 million in liquid assets like cash, which they are able to invest in. And he's overall, he's managing about over $1 billion of assets. So I found that to be, I saw that to be amazing. And one key thing he told me, the reason he left his pharmaceutical company was he wanted to have equity. He wanted to have ownership, and he said, whatever you do, make sure you have ownership, you have equity, because that's, at the end of the day, that's what makes you rich. That's what he said, and that was his words. So I found that to be interesting. Next, I met with a professor from UTD. He himself entered the field of finance for a couple of years before coming back to the academic side of things. He does a lot of research regarding different valuation methods. That's why I went to him, and he just recently published around a 300-page article regarding, or his research paper regarding different type of valuation he was experimenting with. And my fourth interview, I met with a head of an investment group at a private equity firm here in Dallas, Mr. Kamil A OW. He started himself as an investment bank, so he took that path of going to an investment bank and then heading out to private equity following his first 3 years. And the reason he told me, he said, when you're looking at a career in the world of finance, just make sure it's something that you're something that's passionate about. Because he said, you want a career where each day is different, each day is a challenge, so you get to enjoy each day and it never gets boring. And then here, Mr. Nix, he was a former student here at Frisco High School. He attended the University of Texas, just graduated about 8 months ago. So he's sort of at the entry-level position as an analyst. So he gave me a great perspective, something which I had never expected to get, especially here in Dallas, because most of the analysts are based out of New York. So I met with him, and it was hard to reach him, but after like a few weeks, we were able to sit down and meet. He sort of explained what the analyst does. He said that financial modeling is sort of big, and I used that to help me base my original work off. He also talked about the crazy hours, how he used to work. He works 100 hours a week. He gets called in at 3 a.m. in the morning saying he needs to come in, turn this model in, send it out to New York, and it's due in 3 hours. So he said there's a lot of sleepless nights, and it's hard work, but it's rewarding. And then lastly, I met with Mr. Fuentes. He was Mr. Goff's partner who built their own private wealth management firm. And a little piece of advice he gave me was get into the best school. Because when you're if you want to enter the investment banking world, they sort of help their own in a sense where they go out and recruit students from their own schools. And if you go to one of those good schools, you have a really good chance of getting in. And finally, my mentor, Mr. Goodwin. He's originally from Canada. He moved down here to play college football. After playing his 4 years, he wasn't drafted in the NFL, but he was drafted in the CFL. But he didn't want to take up that opportunity, so he sat out for about a year, studied just different careers, looked up different things that he was interested in, found out that investment banking was a great opportunity for him. So he went out, he started off in a small boutique firm in New York, but then he ended up moving to Goldman Sachs, which is pretty much the best investment bank. And he was at the top of the top. He was working on Wall Street, and he told me this crazy story how one day he was working at the office as a vice president, and one of the managing directors came in. That's like the top position, and they had a pitch book due that day. They'd been working on for the past couple months, and it still wasn't complete. So he threw a chair out one of those skyscrapers out in New York. So he threw a chair out the window. So I found that to be really funny. So now on to my original work. For my original work, I intended originally to build my own merger and acquisition case, but that was a lot to handle just to start off with. So my mentor helped me find a leveraged buyout case, which is sort of a setup of what I wanted to do, but it was set up and or structured for myself so I could go ahead and take it on. It was from the Northwestern Kellogg School of Business. It was based off of Toys R Us and how in 2005 they were bought out by several private equity firms. I was given the task of playing another private equity firm, and analyzing the investment opportunity and seeing if it would be a smart choice for us to enter the consortium. So to start off for my original work, I had 4 major tasks. First was to build a financial model, which is what the analysts do on a day-to-day basis. This consisted of the projections of what I felt the company would, how much it would grow, how much revenue it would make, the profits, expenses, stuff like that. And then next was conducting thorough research into the industry outlook, both American, international, and then online. And lastly, I just weighed the pros and cons of either joining the deal or backing out. And lastly was my decision. So here's a little snippet of my financial model. I was given the information for the years 2003, 2004, 2005, and then the remainder of the years I had to project. And it was really difficult given the fact that the time's already passed, so it was really difficult for me to place myself in that position at that time. But with the help of my mentor, I was able to do that. So I focused on net sales, which is the amount of sales they do. Gross margin is the profit following expenses. So ultimately, you can see 2003, they had $213 million in sales, and it dropped off in 2004 to only $63 million. And that was when the buyout happened in 2005. So it jumped back up because the private equity firms were able to stabilize Toys R Us, help it grow again. But then again, in 2006, it fell. So just this sort of fluctuation in the net income was very unreliable and something I wouldn't want to invest in. Also, you can see that the net sales overall are increasing, so that means they're selling more, but the thing is their margins are decreasing. They're having to spend more money on either marketing or advertising or just the product in general. That's why their net income was slowly dropping. So when I looked into the industry outlook here in America, I found out that the traditional toy stores were going in decline. A lot of the large stores like Walmart and Target, people were just going there because it was more convenient. It was more of a one-stop shop, get all their stuff at one place. And it's just the competition was too strong for Toys R Us to sort of maintain a level of market share that would be profitable. So overall, the industry outlook here in the U.S. was poor. Online, similarly, Amazon was sort of taking over the market. At the time, it was just sort of building itself, and now it's just animal online. So Toys R Us was really behind on the online market at that time, and it wouldn't be able to reach Amazon at that pace. I felt that would be a negative outlook as well. On the other hand, globally, Toys R Us was actually doing a really good job, given the fact that a lot of these international countries don't have these huge retailers like Walmart and Target, and Amazon, while it's global, it's not as big as it is here in the U.S. So I found out Toys R Us, if it had any chance of staying afloat, it would be best to do it globally. So like I said, the risks were there's the emergence of e-commerce, the online-based sales, and then the superstore competition here in the U.S. Just the overall decline in national retail, the retail toy industry, and then also the case which I was presented was me, the private equity firm, joining other private equity firms, and just the strict regulation the government has on these club deals would sort of restrict what you wanted to do with Toys R Us at that point, so it wouldn't be a great deal. And lastly, the ownership structure. Having so many firms as the owner, it would cause disagreements in philosophy and stuff like that, so I just felt the club deal wouldn't be a great structure for the buyout. The positives were the international outlook, and also there is a positive with the ownership structure. With multiple firms equals greater funds and resources, so you have more money to pull from when you're doing advertising and stuff like that. Here's a graph showing the increase in overall net sales following the deal, but here shows the net income, how it really hasn't improved much, and even 2006 it dropped by a lot. So final verdict, I said, as a potential investor, I would decline the opportunity to buy out Toys R Us with the current and future market trends and economic climate. So for the rest of the year for ISM, I would like to continue meeting with my mentor on a consistent basis. He's always flying around. He usually takes trips. He visits like 8 places within a span of 2 weeks, just popping in and out of different cities, because a lot of his analysts are, like I said, based in the larger cities. I want to focus on the sell side, which is what he does, focusing on selling companies, and then mastering financial modeling, which is a basic investment banking. And then my mentor has also spoken to me about maybe flying out to New York during the spring break or sometime this year to maybe go visit his analysts out in New York, and also go onto the trading floor and just experiencing Wall Street for itself, because he said that would be a great learning experience. And then my final product, which is going to be a pitch book. And then future plans for college, I'll probably end up going to UT Austin, majoring in finance, and I would like to intern at an investment bank, as I said, that really helps you get a foot in the door and land a job once you get out of college. So hopefully I'll be able to do that, and thank you.